Good afternoon and welcome to NYFP. Today I'm joined by Brian Barnier of ValueBridge Advisors, and we'll be taking a closer look at the latest U.S. housing figures. Brian, good afternoon. Thanks for joining me.
Glad to be here.
Well, we've been paying attention to housing figures this summer, but we've been getting data that's been conflicting. We just got pending home sales and it did come in below expectations. But taking into consideration that everything has been mixed, what do you think investors out there need to pay attention to when it comes to housing?
Well, the number one chart for me, trend-wise, is to always look at what's the new investment in housing, construction and big remodels on a real basis per capita. And based upon that, we've had these long-term trends. We went way up into that treacherous triangle of the housing credit-driven boom, dropped, and now we're building back up. And that backup level is just about the trends that we saw before that whole thing. So it's actually fairly solid investment in housing right now.
And Brian, when it comes to some of the trends you're seeing in terms of growth, what are you seeing in the data?
Well, when we look at the different data points that are out there, the kinds of things that we're looking at, we shift from that investment piece to actual, what are they building, hammers and nails, square foot. And when we look at square footage, we can compare what's built to the population change is one thing to look long term. And there, we're sort of hovering in this range at sort of post-1980, a little bit down, looking to go back up, but okay. The other piece we look at is how big are those houses compared to the average housing size? And what we see is that we are at historic highs pretty much right now, which says that we're pretty much blowing out the doors in construction.
And it's interesting, when we get earnings out from the major home improvement retailers, we've been seeing some positive trends, and that's also a good sign. But in terms of the Fed MBS purchases, what are we seeing, and what does that mean for jobs in the sector?
So when we look at the jobs issue, this is really important because remember, Fed policy was supposed to be doing more than driving housing, but all that employment. Three key data points there. First, the average hourly earnings, real basis. That's down in the doldrums for us of the sort of pre-bubble level. Hasn't dropped back, gone back up. The second thing we look at is weekly earnings. Now, real weekly earnings. Those are very good. Those are pretty much at bubble levels, very strong. But then we ask, why is that? What's in the data? And that's when we look at employment. Employment is way down at historical lows that we saw in the early 90s. That's the thing that's scaring people and why this really doesn't have legs in the housing market in terms of driving jobs.
Recently, we've been seeing some interesting reaction in terms of home builder shares when we get some of the housing figures, depending on what housing figure it is. But what does this mean for investors out there?
So when we look at the numbers overall, we're looking at the pricing that's coming in. And when we do that, we find out that people are fretting, like you say, over the home builder numbers and Case-Shiller and all that. And you know what? Historically, pre-bubble, we are high. So we only look low compared to the bubble, but before that, it's a very high number that's out there. And so that should give people confidence that we're back at a good level in terms of housing prices.
And last but not least, in the near term, we will be paying attention to the jobs figures, which will be coming out at the beginning of September, the first Friday of the month. But in terms of housing, overall, what are some big trends you're seeing?
Well, what we're looking at is how the builders are reacting to all this. So for example, I talked to one about a Midwest development, and they took a dormant subdivision, they're replanning it, driving it more toward the averages. So the big houses are coming down in size, that's good, square footage, and then a lot of the condos they're building are being flipped into duplexes. So we see this merging toward the middle, where they're trying to hit the right number. What investors are looking for is the builders that are doing a great job at risk management and agility, because they're the ones that are going to be able to capitalize on these trends changing.
Well, Brian, it is important to make that distinction, so thank you for taking a look at the housing figures, and thanks for your analysis as always.
You're most welcome.